spot gold keeps doing what it always does when emotions take over. It just climbs. In this video, I'm going to talk about gold spot, gold futures, and the top 7 gold mining stocks and how they are correlated, and using supply and demand imbalances as the base, as the foundation. Okay, I will break down why gold keeps on breaking all-time highs in 2025 and what pure supply and demand imbalances are telling us on gold spot futures, GLD, the ETF, and everything. And these are the top 7 top most liquid gold mining stocks, and the fresh demand levels that are being created on the weekly and the monthly time frames. I'm not going to use any indicators, no news chasing, no fundamentals, although I will talk about it so you understand the difference between technical analysis for gold and fundamental analysis, just price action and imbalances. So let's get started. The top one on the list, as you can see, is gold spot XAU versus the US dollar, and this is the monthly time frame, as you can see in the watermark in the middle of the screen. I'm using TradingView to do the analysis. You can use any other trading software to analyze, but I do use TradingView because I consider it to be the best trading platform online. So gold spot monthly time frame, it just keeping rallying and rallying, breaking all-time highs. To be honest, I didn't expect this to happen. It just happened. It broke 2,000, it broke the 3,000, the 4,000. It's just insane how it has been rallying without even pulling back in the bigger time frame. So gold has created, spot gold has created a new imbalance around 3,400. This could be drawn a little bit wider. Usually these wicks are penetrated, but that's where we are expecting gold to drop. It just doesn't happen. The last month or the current month, gold spot has rallied about 13%, and the last 3 months like double. It's like 23%. So this is what we see on gold spot on the monthly, and on gold futures we see exactly the same. Another imbalance at about $3,400. And on GLD ETF, we have very similar imbalance too, around 316. This is the ETF for gold, SPDR Gold Shares ETF. So what happens is that gold has kept on rallying and breaking all-time highs on both the futures, the ETF, and the spot market. And well, as supply and demand traders, we want pullbacks. We want the rally, and then we want the pullback. So you can use, obviously, when you see this, there are other strategies that you can use. I mean, it rallies, it bases here for 1, 2, 3, 4 months, gold, spot gold, and then it breaks the highs. So you could use breakout strategies for gold and for ETFs, like on GLD, because the same happened. Okay, the breakout strategies are more aggressive, and they are not as high probability as waiting for the pullbacks, but it is another valid type of approach, another methodology to trade gold. Okay, you can use the monthly. If the bigger the time frame, the better, because if these pauses here happen on a bigger time frame, the odds of price running higher are higher. If you use the daily time frame, you can also have these breakouts after pausing. It pauses, it breaks, it rallies, it pauses, it breaks, it rallies, it pauses, it breaks, it rallies. So those are, you can use that as breakout strategies on the daily minimum. Okay, and then weekly and monthly. So the bigger the time frame, the higher the probability. And the same happen on gold spot, because gold futures, GZ, because they are highly correlated. Spot and futures are more or less the same. The price action on these two assets are usually identical. So trading one or the other depends on what type of trader you are, if you are a futures trader or not. So the thing that gold has been used as a safe haven almost always. When uncertainty spikes, people run to what they trust, and usually it's gold, the metals, and that's not a news story. That's let's say human behavior. I don't need fundamental analysis to know that the rally is going to keep on rallying, but since I am not a breakout trader, I need to wait for the imbalances. There is another imbalance here on the weekly on gold futures at around 3,744, and that could be the next spot for gold futures to drop, to retrace, because after a very strong rally made of several large candlestick bodies, we usually see this. Sometimes we just don't, and it keeps on rallying, but I am not trading on the exceptions. I'm trading on the probabilities and the highest probability scenario. Okay, so like I said, and you already know, if you already know me, I'm not using fundamental analysis because they are already, I believe they are already priced in and reflected on the bigger time frame charts. I just read where the institutions left their footprints, like here on GC on the weekly time frame around 3,744. Okay, and the monthly weekly imbalances like this one. The weekly imbalances around there, and the monthly imbalances. And demand level is around 3,451. So since 2023 or even longer, okay, 23, 24, 25, gold has been rallying. This is a quarterly time frame. It's just insane. And if you use the 6 months time frame, it's just super strong. I mean, when these happen, I mean, the underlying asset, in this case, gold futures, GC, is overextended. This just can't keep on happening over and over and over. It just has to drop, and the stronger the rally, the bigger and the sell-off is going to happen. So it's an imbalance here on GC at around 2,200 more or less, and that will be a very long-term type of asset. And you might be thinking, well, gold is not going to drop there. Well, it wasn't going to drop down there to that 6 months average demand, and it did on July 2015, and then it rallied. So whatever you think is not going to happen probably is going to happen. So here we can see, after the strong rally on GC on gold futures, the monthly demand level is there, the weekly demand level is there, and logic says that when price has been rallying a long time, this is what usually happens. So these imbalances in the future might be eliminated. They could play out for some time, but this is what we are expecting for the long term, very long term. I'm not talking about 2025. Okay, I'm talking a lot like 26, 27. Okay, but this is the long-term projection forecast for gold futures, and the same applies to gold spot gold. Okay, the monthly demand level is around there, the weekly demand level should be over there, and then after such strong rally, we are expecting a deeper retracement. Okay, that's like price action basics and supply and demand basics. Okay, so gold keeps on breaking all-time highs, but the supply and demand reality is the one I'm telling you in the bigger time frames, on the monthly and the weekly. This is demand level, another one over there. So this is new highs on gold, spot gold, and the ETF on GLD. Okay, I'm going to be switching back and forth between the three because the price actions on the three assets, on spot gold XAU, on gold futures GC, and on GLD, the ETF, are more or less the same. So it all depends on what type of trader you want. If you are futures trader using smaller time frame, you can use GC, obviously, a long-term type of trader. And GLD ETF has a lot of liquidity. For options too, you can use options in this commodity. So as price continues to rally, okay, new demand levels are being created, stacked above previous ones, and unfortunately, gold just didn't pull back. Just rally base, rally base, rally base. This is the picture of overextension on gold. Each strong rally leaves a base. Here, another one, another one, another one. Each strong rally leaves a base. Those bases remain respected. Sellers get absorbed on the left at all-time highs, and then the breakout happens on GLD futures. And the same is true. So this is the ETF on GC and XAU. Okay, and that's it. The story is reading in the candles, not in the headlines. And Unfortunately, as supply and demand traders, gold hasn't pulled back to the smaller time frames. It did pull back to daily demand levels a few weeks ago in the past here. Remember somewhere here. And it tried to reach this one. It just kept on rallying. And each strong rally leaves an imbalance on the daily. It just didn't pull back. And that's the sad truth. So analysts can explain the rally with lower real rates, ongoing central bank buying, renewed ETF inflows, like it happens for GLD. I don't even understand what that is, but that's what they say. So it's a safe haven demand on geopolitical risk, a softer dollar, de-dollarization narrative, limited mine supply growth. I mean, that data is very complicated for me. I just wait for these imbalances to be reached. The pullback didn't happen to the weekly, the daily, the monthly. It just kept on breaking out. So you could use breakout strategies, but that's fair enough. I mean, for me, all of that shows up first as fresh demand levels on the charts, on the daily, and the weekly, and the monthly, and fundamentals say why imbalances show there. So spot and futures have kept printing higher highs, new demand levels, clear staircase accumulation, and now overextension. And as long as new valleys form and hold, the tape confirms buyer control. No extra ingredients are needed, to be honest. So let's analyze now. Now whether we know that gold has been rallying, you must be saying to yourself, well, this guy's saying nothing new. I can clearly see that price has been rallying without pulling back. So what is he talking about? But well, if you've been following me on previous analysis, these imbalances price almost always pull back to it. Okay, they just drop, so you just have to be patient. So there are two different ways of trading. I mean, you see an area where you can buy based on resistance or support or whatever. Imagine you do a breakout trading, the highs are broken, you wait for a close maybe, and then you take the trade and it's a win. Or you just wait for price to break out and then you wait for new demand levels to be created. Those are two different ways of trading. I am the type of trader who waits for the pullbacks. Okay? If you are a breakout trader, there will be many opportunities on gold. But if you are a pullback trader, where you wait for these imbalances to be to trace, okay, then obviously you missed all this big move on gold. Okay, unless you say, okay, I'm gonna place a trade there, my stop loss around there. Okay, good. But the problem with trading breakout is, where do I place my stop loss? With demand, it's very, very clear. You take the trade here, stop loss there. So you can calculate the risk, the number of contracts you can buy, lots, mini lots, micro lots, whatever you're doing. And it's very easy to calculate. But when you do breakout and other strategies, you have to use percentages or maybe support and resistance lines, etc. I'm not doing that. So each of these pauses that you can see in the smaller time frames, and daily and even smaller time frames, are institutional stocking points where those wholesale zones hold, momentum resumes, and structure stair steps higher. That's accumulation, and that's not narrative. So what happens now? Let me analyze the top 7 stocks in the market, in the gold mining sector. Okay, we've got the first one, Newmont Corporation. Okay, and these companies, they're supposed to be the world's largest gold producer, widely traded, with a global multi-continent portfolio. And its core name for institutions seeking gold exposure through equities. So what do we have here? So on Newmont, as you will see, we've got a new level of demand here at around 66, which is very similar to the rally that we can see on GLD, gold futures, and spot gold. Okay, so stocks been rallying. and just didn't pull back. That should be a weekly demand level here too. It just didn't pull back. It's just breaking all-time highs again and again. So, but in this one, in this particular stock on Newmont Corporation, which is the world's largest gold producer, okay, why did it rally that way? The pullback, this absurd, okay, pullback that we are waiting to happen in a few years on gold. We're talking about years, okay, maybe a couple of years or more. So this is not for now, okay. This is a very long term that I will hopefully revisit if I am still alive, okay. Hopefully, across all my fingers, I will revisit it when this happens, because it is going to happen, okay. No matter what, it's going to happen. When, obviously, I cannot predict, but it is going to happen. So what happens is that, well, these pullback, this is ridiculous. This is not going to happen. Well, let's take a look at Newmont Corporation. Okay, so what happened on Newmont Corporation was this. One sec. No, this is not the one. Sorry, this is not Newmont Corporation. This is German stock, Newmont. So this is Newmont Corporation. One sec. So what happened? 6-month demand level over there. Okay. So what happened? Well, it was breaking all-time highs. Oh, wow, all-time highs, broken, great. I'm going to do breakouts. And then it drops. Okay, and this is what we are actually expecting on gold spot, gold futures, and GLD ETF. Okay, so what happens? The all-time highs was broken at around on Newmont Corporation, gold producer, at $81.91. And then look at that huge wick on the 6 months. Took profits, take profits happening there, and then it dropped where? To the 6 months every month. And from there, we called this trade many months ago, okay? And then it just rallied strongly, and now it's breaking all-time high again, creating what? A new imbalance here in the monthly. So here, that unexpected and absurd pullback. Wow, Newmont Corporation is not going to drop there. What? Yes, it did. Okay. So the previous 6 months demand level here already played out, and now it is creating new demand levels here. Okay, reflecting renewed accumulation as price advances and breaks all-time high again and again. Okay, so it's all about supply and demand in the bigger time frames. After all, if you take a look at the weekly time frame, well, this is like rally base, and this is overextension. So, and this is very easy to be broken when sellers, institutionals, traders take profit, and then price drops heavily. The same happened here, right there. Rally base, and then suddenly bearish candle, and then it dropped where? To the 6 months every month, and then it reversed. Exactly as we were expecting. And this is actually happening again. It's happening again, okay? Same structure. This is unsustainable. These are unsustainable moves on Newmont Corporation. We don't want to trade. Obviously, short-term scalping on Newmont, okay, no problem. But the long-term, this is going to happen when? I have no idea, but it is going to happen. Okay, so let's take a look at another one. One of the second top gold producer. Okay, and that's Barrick Gold, ticker B. Okay, so on Barrick Gold, this is one of the largest, most diversified gold producers worldwide, operating across multiple regions with tier 1 assets. And well, it is a frequent proxy for gold equity flows. And what happens? We've got a quite strong imbalance here in the monthly, located at around $22 per share. So Barrick Gold is trending up, obviously, rallying, and creating new imbalances. If we go to the smaller time frames on the weekly, we also have the picture I told you. It's like rally base. Okay, it's overextension. And when that happens, after a very strong rally, this is what we are expecting. Will that happen? I have no idea. And I do not care. Okay, I'm just waiting for the pullback. Over. Okay, you can do breakout strategies. You will be making money, but if this happens, so if you take a trade here, a breakout trade on Barrick Gold Corporation, where did you place the stop loss? Okay, just think about it. Look in the monthly time frame. Well, where 10%, 1% underneath, 2, 3, 4, 5, 6, 80%. Where did you place your stop loss? Okay, to protect from this potential sell-off. So it's tricky. Okay, unless you use other price action strategies for gold and stocks that can tell you more or less where you can place the stop loss. It's complicated when you do breakout trading. Okay, so now we're probably Barrick Gold will drop around this area and then retrace a little bit, or drop to the monthly demand level here around $20, where we are expecting to buy again. So this is what is the prediction for the forecast for Barrick Gold. And the third one is going to be AEM, Agnico Eagle Mines, which is a leading senior gold producer too, with a strong emphasis on stable, lower cost jurisdictions such as Canada, Finland, and Mexico. So it has a conservative development, and this keeps it highly liquid and well followed. What happens? Does it ring a bell? This monthly demand level, it is exactly the monthly demand level that we can see on GLD ETF, on gold futures, GC, and on gold spot, XAU. It is highly correlated. Okay, it is highly correlated. So when you take a look at the bigger time frames, it just keeps on rallying and rallying and rallying. And unfortunately, on the smaller time frames, on the daily, it did pull back to this one over here, not pull back to this one over here. It did pull back to this one. So on the daily time frame, there have been entries after breaking all-time highs. But on the bigger time frames, like the weekly, it just didn't pull back. Okay, so as these levels have already been tested on the way up on AEM or on Agnico Eagle stock miners, okay, when the institutional traders sell and take profit, they are going to be easily eliminated, because all the demand level, all the unfilled orders are already filled, and overextension and the dump will take control. Okay, so well, for now it's just rallying and rallying, creating new demand levels, and they are being respected. So one of these imbalances, this could be another one on the daily at around 165. If these are eliminated, this is eliminated, then we could have a much bigger pullback to the weekly or monthly imbalances. Okay, so this is Agnico Eagle Mining, and as I said before, this is a pullback. This is what we wanted, and this is what we do when we do supply and demand trading. Okay, we wait for the pullbacks. And the next one is going to be KGC, which is King Ross, a global producer with operations spanning North and South America and West Africa, offering diversified mine exposure and solid trading liquidity. And well, you know what I'm going to say. This is another imbalance on the monthly time frame around $17, which is exactly more or less happening and being created at the same time that they are being created on other stock mining companies, GC, gold futures, GLD, ETF, and XAU gold, spot gold. So new demand level is being created, and if we take a look at the daily, it just didn't pull back to any of these imbalances. There was one here, it just didn't pull back, and well, that's a very bad one, and it was eliminated. So tricky one. Okay, so for now it just keeps on rallying, and you can use breakout strategies. I'm not doing that, as I said, but we're waiting for the pullback to, well, it didn't pull back to this one also on the weekly. On the monthly, this is the one. When it keeps on rallying like that, the picture of overextension becomes more and more solid, and it is not a good idea to buy long term. Obviously, for scalping intraday trading strategies to trade gold, King Ross, and all the others, it's okay. obviously, because those short-term trades can play out really well. Okay, but I remind you that I'm not talking about short-term. I'm talking about long-term swing trading and these bigger time frames that act like magnets to price. Okay, and like I said, watch many of my dozens and hundreds of videos and you will see what I mean. They happen. These pullbacks happen. So the next one I'm going to analyze AngloGold Ashanti, AU. And as you can see, I'm going to say exactly the same thing. This company is also a very important one. It's a major multi-continent gold producer with a broad portfolio and quite significant liquidity, often moving strongly when gold trends. So gold is trending up with GLD rallying, GCXAU rallying, and it's creating the same imbalances. So these imbalances on the monthly time frame is exactly the same, more or less created at the same time as Kinross, KGC, AEM, Agnico, Eagle Mines here, this monthly, Barrick Gold, this one over here, Newmont Corporation, this one over here, GLD ETF, this one over here, GC futures, gold futures over there, and spot gold over there. They are highly correlated as gold, spot gold and futures keep on rallying, breaking all-time highs. It is creating these strong imbalances on these bigger time frames. Unfortunately, the pullback didn't happen unless, well, we're talking about AEM where it did, but on the others, just rallying, and that means that it is obviously something big happening. And well, the buyers get exhausted, take profits. I mean, this is many people out there are making a lot of money. So, but they are making. They didn't make. Okay, why? It's unrealized profit. I imagine you are making $50,000, whatever, for the trade that you took, breakout trading, whatever you did. Okay, using options, you're making a lot of money. So you are making, but you didn't make until or unless you close your positions. Those are unrealized profits. You need to realize profits by closing the trade. And when many close their trades, this is what happens, and the pullback happens, and then you buy again. And that's how the market is structured. Sometimes the pullbacks do not happen, and when they do happen, the trend has already changed, and we are expecting a deeper correction. Okay, so this is what we are waiting on AU, on AngloGold Ashanti, which is the same thing, and on Goldfields, GFE Goldfields Limited. It is one of the top companies too. This is a large international diversified gold miner too, with operations across several countries, actually traded as a common institutional holding during sector rotations, and we are expecting this, but this is going to take a few months. Okay, as you can see, it's the same structure, rally-based rally that happened on AU, Kinross, Agnico, Barrick Gold, Newmont Corporation, and all the others. Okay, so it just didn't pull back to this smaller. Well, it did pull back to this one on the daily. Okay, strong rally, and then it pulled back and it played out. This could be another one, and it's getting more and more aggressive as price continues to rally. Another demand level here in the weekly at $35.50. It just didn't pull back because, well, the buying pressure is so strong that it just doesn't pull back maybe a couple of days, and then it continues to rally and breaks all-time highs again and again. Okay, and the last one on the list is going to be Franco-Nevada stock, FNV, and as you can see, the same structure on the monthly has been created around $175, and this one I didn't know until I researched a little bit more for today's video. This is not a traditional miner company. Okay, Franco-Nevada is a royalty streaming company, and what does that mean? I didn't even know. Okay, it gives investors leveraged exposure to gold production without let's say direct operating risk. It's one of the most liquid names in precious metals equities. So at around $180, we have a new demand level on the monthly, and it's trying to rally higher and higher. and we have already bearish price action. Hopefully it will drop. Maybe it will drop around here and then rally again. But if gold continues to rally, well, that's not going to happen, obviously. So we need gold, spot gold and futures to drop a little bit. But if we take a look at the smaller time frames, there's no sign of bearishness. There's no bearish price action. This cannot be considered bearish price action. It's like a doji on the daily time frame, but this happened on the way up many times. This type of candlestick, we need something bigger and on bigger time frames like the weekly. And hopefully this will happen. Okay, and that obviously, if this happened on GC and gold futures and spot gold, that's going to drive prices down on all the top 7 most liquid gold mining stocks, and it's going to drop to these imbalances where we are thinking to buy again. So gold's 2025 strength, okay, is another weekly demand level here at around 3,700 on spot gold. So this is the natural outcome of institutional accumulation, nothing mystical, nothing special. The charts show it on gold, spot gold, on GLD, the ETF, and all the others that we've seen, and across the top miners where new monthly, weekly, and daily demand levels have emerged. Okay, I don't predict. Okay, I read price action. I do not predict. I read price action, which is the the accumulation of all the trades taken by the everyone. Okay, a single institutional trader or all the retail and institutional traders. So I just read price, patience over noise. That's how I trade and how I teach a certified online trading community. Okay, so let's see if these pullbacks happen. In the meantime, obviously you can use option trading strategies to buy GLD futures also on smaller time frames, but be warned. I mean, we are expecting this on GC and spot and everything, spot gold. So be careful, because those short-term type of trades or even swing trading could not play out, because at some moment gold has to drop. We cannot forecast the exact moment. I could if new demand supply levels were here in control, etc. But since this is, new space, new highs, all-time highs on gold futures and spot gold, I just cannot predict when it is going to happen. But when this is going to happen, but it is going to happen. Maybe another month at the end of the year, when maybe some companies decide to close their positions and realize profits, and then in the beginning of the year, we're going to see here like this, okay, bearish candle, maybe a dark cloud cover on the 3 months, a bearish engulfing pattern, and then the drop will start happening. Okay, but for now, I believe this is going to continue like this, but be careful, because this could drop big time. It's going to drop big time, gold futures and spot gold. But in the meantime, obviously, short-term long positions on gold and gold mining companies is okay. Let's see what happens. I hope that you are having a great day. Enjoy the day, and if you like the video, click on the like and the button and subscribe to my channel. I will be updating other charts during the week. Have a good day.